Hello, everyone. We just started. Happy to see everybody like in July, first day of the summer. And we are starting our new webinar about the uh, IML and also like suspicion transactions, how to avoid, how to prevent, what compliance team can do with it, and so on. Today, our special guest is Niko Demchuk. It's head of legal of AMLBot. Niko, you can present yourself better than me, I believe. Hello.
Sure. Hi, everyone. I'm Niko Demchuk. I'm a lawyer at AMLBot. I have around 10 years of experience working in a law firm, then being a senior AML auditor for Big Four, auditing banks, investment funds. And then I moved to startup, let's say, sector, and I was in-house lawyer for some biggest crypto exchanges. And now I am at AMLBot, a blockchain analytics company.
Thank you for presenting yourself. And I am Vadim Rozov. I am CEO of Simplify Labs. We are provided white label solution for centralized exchanges. And today, we will talk about the compliance and how MiCA change or doesn't change anything. Let's see where talk will go. Please let's check like connection. Can people can you put some like smile or plus in the chat so we can see that everything is going well. Good. I see smiles. Great. And it will be also interesting to see geography, where you're from or operating, in which countries can you put some information? Portugal. Okay, great. Poland. Okay. Malaysia. Interesting. Really huge difference. Germany. Great. So first of all, I want to speak with Nick about the current situation on the European market. We'll not cover only on European, but in general. What do you think, Nico, about the MiCA regulation? Does it change anything regarding to compliance teams, or it stays the same as it was before?
Sure. So, MiCA, and what I see in business or among business that you can very often see MiCA compliance solutions, or you need to look at MiCA when you need to comply with anti-money laundering, etc. But I think it's not very true, let's say, or not very accurate, I would say, because MiCA literally has almost nothing to do with anti-money laundering. And the business, which let's say had some WASP registration, was receiving WASP registration in different countries before implementation of MiCA, needed to do the same as they need to do now when MiCA is already in force. So if you read MiCA, then you will see that MiCA, for example, also does not define what is suspicious transaction. Basically, there is nothing about it. And there's nothing about what kind of AML KYC process you need to have. MiCA only says, so if you will read it, there are several points where they mention AML. One point is that the applicant, so those who are applying for MiCA license, need to demonstrate that they have a sound AML, KYC processes and procedures in place. This could be also the reason for the license revocation if these processes are not okay or not compliant with the current regulations. And that the shareholders, directors should also not be involved in any money laundering cases in their life. Otherwise, they cannot simply hold such a position in a crypto asset service provider. So basically, that's it. MiCA doesn't tell us what kind of process you need to build, what are solutions, what kind of KYC you need to have, nothing about this. So those who are saying MiCA compliant, mostly using for, let's say, as a clickbait for marketing purposes, businesses, just to attract customers, etc. But MiCA literally doesn't say you anything about AML. But so, as I said before, the scope of AML that company needed to do before implementation in MiCA and after implementation MiCA in the European Union is the same. There is nothing has changed because MiCA does not regulate AML. But MiCA says that you need to have such processes. So what has changed? Why everyone started to talk about AML and talk about processes, and they wanted to upgrade them. They wanted to invest more in compliance team development. So what MiCA actually has changed? MiCA has changed the process, how the license is issued to a company. I will give you two examples. For example, France, Spain, even before implementation of MiCA, they have the WASP regime for those who are providing crypto service providers. And in these countries, in order to receive WASP registration, you would really need also to prove that you have very good AML KYC processes in place. They will be checking, they will be reading your policies and procedures, they will be asking a lot of questions. They will be checking if you comply with their local AML regulations, because, by the way, there's not a regulation in the European Union, so it's difficult to build one AML solution for all the countries of the European Union. It's a directive, which means that you can still have some peculiarities in each country, how they want you to do, for example, customer onboarding, what type of information you need to ask, collect, etc. So in those countries, under WASP registration, like France, Spain, in order to receive WASP registration, you would really need to prove you have a really good AML KYC processes in place. Otherwise, it would be impossible to receive. So when MiCA came into effect, this company could easily also apply for a MiCA license. And let's say this aspect of AML would be already covered. They don't need to do anything there. They would need to still comply with other requirements that MiCA has, because MiCA, by the way, it's mainly about licensing, customer protection, and supervision. So for those who want to apply for the license, MiCA has requirements what you need to do. But MiCA does not give you details, for example, about AML law. This is other specific regulations and directives. So like France, Spain, once you receive WASP registrations there, any business, they have this point covered also when MiCA came into force. They basically do not need to change anything in AML. But since before MiCA, the crypto regulation in the European Union was really fragmented, and there were countries like Poland, like Czech Republic, very popular, that everyone was going there and was receiving WASP registration. Why? Because it was very easy. No one was really checking them. No one was really checking their AML KYC processes. Business were basically going there, buying some template AML procedures from some consulting company, and in 1-2 weeks they will receive their WASP registration and can provide services, crypto services. So what MiCA has changed? MiCA basically has changed that all those applicants, let's say now, or those WASP companies, now would really need to go through a very detailed revision process made by, not like it was before, the register made just when you, for example, was applying for a registration WASP in Czech Republic, you would basically notify the Czech register that you provide such a service, and that's it. No one was really checking your documents. So now in every country there will be a special regulatory authority, usually a financial supervisory authority or central bank, who would be really going into detail and checking what are you doing, what other processes you have, also in terms of AML KYC. So this scenario with a template that very many businesses was buying, but now was actually understanding what they're buying, I'm sure many businesses were also not really even complying with those templates that they were buying. So now they would need to really prove that the processes they have, they are compliant with the local AML of the country where they are applying for a MiCA license. And also not only written, but also they will need to prove that they have real solutions to comply with such requirements that are written in internal policies and procedures. Just because of this, that will be really someone who will be checking application, who will be asking questions, who will be like in detail checking everything. Now we are having a lot of questions coming out from the business, mainly those who received VASP registration in those countries like Poland, Czech Republic, or other countries that didn't really check the application. Yeah, it was very easy to receive VASP registration, about AML, about what to do, what do they need to do, because basically they were simply receiving the slides. There were many businesses receiving VASP registration, having templates and procedures, doing very minimum, like only KYC, and that's it. Not going deeper into transaction monitoring or reporting, how they record data, who is responsible for what, etc. So now they will need to do it, and that's why now they're asking questions. Whereas those who receive VASP registration in a country that were really checking everything, like I say, France, where I had personal experience helping with VASP registration, of Spain, this point is really covered. They don't need to do anything in terms of AML KYC because, as I say, AML requirements, they are the same before MiCA or after MiCA. I mean, MiCA doesn't have it, yeah. So that's why this company basically would be much better prepared than those who receive WASP registration in, let's say, Poland or Czech Republic.
Yeah, Nick, I just want to add to this is that right now you like should have MLRO in-house, and these policies should be applied, like as you said, and checked by regulatory. And previously, in many companies, it was like some consultancy outsource or something like that, and this is ended right now with MiCA. But anyway,
that's a good point. Actually, I agree. So if what MiCA has changed, maybe actually this has changed. That many companies before, not many companies, let's say, those who like Poland and Czech Republic, because in France it was still needed employment agreement for AML and compliance officer, but those countries that didn't really have a good regulation, didn't really check applications, you could basically put anyone. Even director could also be ML officer. There is no conflict of interest for them, or a service agreement, and that was sufficient because, as I said, no one was checking. Now, when they will start checking, you will need to also show that not only that he needs to be the employee of the company, the compliance officer, but also he needs to have experience, education, a good background, etc. So it cannot be any person. That needs to be experienced one.
Also, I just want to add, if you have some question, you can write it in the chat in the end of the session. We will answer everything. So anyway, Niko, we are talking about suspicion transactions in general. So this is such case when how you can like detect one, or how you can, even if it's not written in MiCA requirements, but anyway, you should do your homework, and follow best scenarios or best case scenarios for your business, and what you can focus on, or what data can prevent this suspicion transaction on your platforms.
Yes. So every business, apart from, let's say, doing KYC, also need to monitor the behavior of their clients. What does it mean? It means monitor the transactions that the clients, customers, or the business are doing. In order to see or to check is that every transactions are reasonable, or there are some suspicious transactions and they need a more detailed attention, maybe some investigation, and if the suspicion is indeed valid, then they need to be reported to the financial intelligence unit. So what could be those suspicious transactions when we are talking about cryptocurrency? Some countries in the European Union issued guidelines about what could be suspicious transactions with cryptocurrencies. For example, in Estonia, there were one guidelines that's saying that if a person was buying for a big sum of money, which was at 32,000 euros, something in cryptocurrency, then or change this amount of money, euros, for cryptocurrency, then this could be considered as a suspicious transaction, or transactions that needs to be detailed attention, maybe to ask for the source of funds. Also, transactions that are originating from technologies that provides anonymity, such as mixers, or they are going from Wasabi wallets, or they're used by some intermediaries in between, maybe some privacy DeFi protocol, or if it's a privacy tokens that are not trackable. All those would be also considered as suspicious. And by the way, in European Union, we have only AML directive that is enforced now, but soon from 2027, AML regulation will enter into force. And over there, first of all, it means that the AML requirements for crypto business will be harmonized and homogeneous. So it will not be like every country can have its own details. They would still can have, but at least a business would know what are those main AML requirements that they can set up their processes, and they would be the same in all the European Union countries. So in this AML regulation, it's also mentioned that if there is technology that provides anonymity, business should not work with such technology, because of course it brings risks that someone would be using this for money laundering or another financial criminal activity. Besides this, so suspicious transaction can be anything. Yeah, of course, it depends on the profile of the client. It might be suspicious because of the big volume of the transactions, or the big quantity of the transactions that a person doing. But in the cryptocurrency, it is possible also to check the origin of cryptocurrency, and it's done by blockchain analytics, basically what we at AMLBot are doing. So our software checks each transaction's crypto wallets for AML risk, meaning where does those cryptocurrency are originated from. And there are some signals sources that of course are dangerous or suspicious. Those are if the cryptocurrency are coming from dark market, from child exploitation, sanctions. Right now, of course, is the most important one that everyone pays attention to, even if the percentage is really low in the transaction. If the cryptocurrency related to fraud shop, to terrorist organizations, there are several dangerous signals that we at AMLBot are checking to see if the transaction is suspicious or not. Transaction can be also suspicious even if they're coming from, I don't know, DeFi protocols, smart contracts, those that we know do not do AML KYC processes. Usually DeFi is not regulated at the moment, so they do not have any obligations to implement any KYC AML procedures. It means that anyone can use them, including, for example, sanctions people, entities, or those who want to launder money. So a person who would be working and would check in transactions, they would need to take all of this into consideration in order to see if the transaction is suspicious or not. What can be, let's say, what could help if there is a suspicious transaction, let's say, alerted on the business side, what they can do in order to find more about such transaction and come into the conclusion whether this suspicion is reasonable or not. Then could use, for example, crypto investigations, one of the tools that helps a compliance team to dig deeper into the origin of the crypto assets and to see in much more details from where this cryptocurrency are coming from, exactly which, if it's dark market, which dark market, if it was a direct exposure or indirect exposure, etc. So this could be also one of the tools how crypto businesses can mitigate risk coming from cryptocurrencies.
Okay, so am I right that, like from my experience, we are building software for crypto exchanges, and I can divide to several groups of activities. So first one is of course KYC. So you definitely should know who is your customer and source of wealth, source of funds, is he SPAP or not, and so on. So this is first like layer. Yeah, you can uh, give access only to the, like, let's say, eligible person to access your system. Then after the first you have personal threshold for each customer, so it's depends on your internal rules what the threshold will be, but it's based on the documents provided previously, on the risk level, and so on. And after that you have like first deposit in crypto, for example, and you can do blockchain analytics, and all this information you mentioned before, it goes from blockchain analytics, from some special tools to operate with. It can be automatic or semi-automatic, but it's a tool set you need to operate. And the last one, it's transaction monitoring rules inside your system, where you can, as you mentioned before, for example, on the Malta, it was a set of rules. For example, how many operation per day each customer do. Does he trying to avoid the threshold limit by like multiple operation or not? And other examples which can mark customer as suspicion activity, and then you should, as MLRO, investigate this case. Does I miss something, or this is like system of layers of protection, full
No,
from your side point of view?
no, it was a good description of the main processes and the onboarding of the client, let's say, and then for the transaction monitoring that every business needs to do. So just not to scare the business, yeah. Um, Usually AML KYC requirements, they are more or less similar in every country, so there's not that big difference. So that's why, of course, none of the business is really going to every 27 country of European Union to see if there are any differences or not. So usually they build one process that should be sufficient for all the European Union member states. And this process that you described is a good one. Apart from that, I didn't listen to the risk assessment. So each customer, after providing documentation, would also need to be assigned a risk, whether it's a low, medium, or high customer. And then depending on the risk, I think the threshold could be applied for such customer.
Yes, maybe I missed. My question, like about your product, MLBot, how it helps, and this analytics helps to reduce the risk. Can you maybe show some examples, or like dive in details?
Yeah. So at MLBot, what we do, we provide a crypto screening tool. So meaning that each transactions, I can maybe also do a quick, let's say, demo.
Cool.
Just a second. So do you see my screen?
Yes.
So so first first our tool and first our software that we provide is screening. So we actually help business to screen every transaction on crypto wallets depending on what they're screening on AML risks. So business connects with via API, and all transactions will be automatically screened on risks. And then you will see like the transaction hash, and then if it's deposit, and then the risk score, how it is. So that actually helps you to mitigate all the risk that will be coming from transactions itself. But since we have now MiCA, yeah, and you would need to show the regulator that you actually do transaction monitoring. It is also possible to monitor your transactions with our second tool, which is called transaction monitoring tool. So not every blockchain analytics company has it, but we had it. Developed this recently, and basically you can set up alerts that are, let's say, applicable to your business, or you think that should be high, medium, severe. So the business, we have a default also settings, but each business can define what's for them would be, let's say, suspicious transaction or high risk transaction, medium risk transaction, etc., depending on the signals and whether it's a withdrawal or deposit, whether it's a direct, indirect transactions. So basically, each business has this opportunity, and once the alerts are set, then each transaction would be checked, and if there is transactions that fall under any of the alert, this transaction will be alerted, and then you will have also a risk score assigned to this transaction. For example, here we have transfer, and we, for example, user 3, there was this transaction that he did. It was an outgoing transaction, an alert severe because of the alerts that the business set up. So basically, this helps business to, first of all, comply with the transaction monitoring requirements that they need to do. Regardless which countries they will go, they need to monitor transactions of their customers. And this tool provides you such a solution for crypto transaction. Yes, we're not talking about fiat transactions. And basically, if you have alerted transactions, then the compliance officer need to look into it. Yes, because it might be false positive or it might be just alert, but there is a reason why it shows so, and there is not a real suspicion. So alerts can be closed, like I think it's here. It's shown that like rejected, confirmed, pending, and the risk 1 low, medium, high. So each transaction, of course, would be checked by the compliance team, and then the compliance team take into consideration the data about transaction, about the customer, yes, applying holistic approach, would need to see if indeed there is a suspicion and this transaction and customer needs to be reported to the financial intelligence unit, or this transaction can be closed as there is no suspicion. There were some, let's say, red flags, yes, but after some internal investigation, it makes sense, and there is no reason to report this transaction to FIU.
Can you dive in your transaction monitoring rules? So, as a real example, what red flags can be like common all over the platform? What should MLRO be looking for?
As a general recommendation, of course, that applies to everyone. Of course, if the transaction has a high percentage of danger signals, those who are in red, those who are high, then this could be a red flag that needs more attention and some maybe investigation in order to see if there is a suspicion, or it was a false positive, or it was a one-time transaction, or the client actually had a good profile and he provided a reasonable explanation why it is so, and this transaction can be closed.
Okay. As maybe more example, I mean, you have demonstrated the list of transaction monitorings, like it's a long list, and it had, I believe, you are providing with your product the like ready to use template of transaction monitoring, which can be customized. Yes, but from the start of using your product, you have predefined rules, which is like common to all European countries.
Yeah, it's a default settings, but it's a business decision whether they want to use it. It's their risk appetite they want to take, or they need to change it. It's their decision and their responsibility. It's not the responsibility of software company.
Yeah.
They're just a software company, and since they have this opportunity to change the alerts, thresholds, etc., they can decide whether they want to do it or it stays as it is. And there is no like a big clarity because there is no regulation over it. There's no guidelines. No one tells us no what is suspicious transactions or what this percentage wise that should actually indicate that the transaction is suspicious. There is no let's say market guidance from market participants as of now. There is nothing. So what we did based on our experience, since we provide the service, we provide also crypto investigation service, and we see when the transaction can be blocked, what are the, let's say, market practice of different exchanges. So based on this, that was made as default settings. But there's always a caveat that it's a responsibility of the business. So it's, if the business wants to have it, they have it. If the business wants to make it stricter, it's possible to make it stricter.
Okay, I believe everybody is looking for the question. What if you already have received the dirty coins on the wallet? Yes. What and your software market it is high or severe? Should you keep it forever or return to the sender or like ask for additional information?
You mean as a business?
Yeah.
Oh, as a business, you need to have processes in play. What you like written in your internal AML procedures. What you do if you have suspicious transactions, and then you need to act accordingly. Your internal process procedures. So it might be different situations. If you receive it, then of course you need to do internal investigation. You need to see at what are those danger signals, what is their percentage, what is the total volume of the transactions, who is the customer who did it, look at his previous transactions, maybe there will be some answers, check this customer in more detail, maybe you'll find some answers why. If not, you can ask questions to the customers why it is so, collect all this information, and then decide whether there is indeed some suspicion, and you need to report then this customer to the FIU, or based on the information collected, you can disregard this alerted suspicious transactions and continue. By the way, I didn't say that this tool, transaction monitoring that we have at AMLBot, it will also be affecting the risk score of customer, let's say. So if the customer will have at least one transaction that would be considered high, then in general, the profile of the customer would be also upgraded, increased to high in our tool. So then the compliance officer would need to know that, okay, this customer is high risk because there were some high risk transactions, and they would need to check these customers first, then those who have some medium or low risk transactions.
Got you. I'm right now just want to read some questions from the chat, if you don't mind, and because it's really interesting questions. It's possible that on the moment of receiving the money, IML doesn't show that there's any problem with it, and later on, we saw it in our experience, this, for example, sender become suspicion, and for example, some authority asked for please mark previous transaction as blacklisted or something like that. How your software work with this situation or handle this situation in general, or what's the approach?
So can you please rephrase the question because I didn't get it fully?
Yeah, question is such situation possible when a wallet sending money is clean in AML service but later become a criminal blacklisted? What to do then?
Again, so what our software will do, our software is just will show you that, let's say, just to be clear, of course, it is possible that the transaction was checked, the transaction was, let's say, low risks, but just because us find more information, or there is a news that the customer who did this transaction is under sanctions and his wallets as well, and then these transactions became high risk, and you will receive this information. Of course, our database and system. I'm not a technical person, but I think it's upgraded every week. So there might be change in transactions, or if you were checking wallets, change in wallets. And then if you have this such a big increase from low to high, of course you will see it. And then what you do again up to businesses' internal policies and procedures. So it's not software companies that we do, it's what is the internal policy procedure of the company, what they need to do, how they handle the situation. But it happened many times in practice that businesses block accounts and ask about transactions that happened a while ago, months ago, or years ago. There is no, let's say, it's not the software company that needs to tell you what to do. It's you, maybe your lawyers, your email compliance officer needs to tell you what to do if you have such a situation. But of course, if it's possible, because database of is getting richer and richer every day, more addresses are created, more information we find about those addresses, to whom they belong. There is also news appearing every day about sanctions of new addresses or new businesses, and this all can impact the check even retrospectively.
Okay, thank you, Niko. And I have two close similar questions. How does MiCA provide guidance or regulatory expectation around addresses poisoning and dust attacks? So
yeah, I mentioned before, MiCA does not really say us anything about AML. And sure, there is none of the law that say in details about what you need to do when there is a poisoning or dusting attacks. The FI sector, or all of this crypto suspicious transactions with crypto, there is a big gray zone, or totally unregulated. Let's say there is no any guidelines what you need to do if there is a dusting attack. I never seen it anywhere, and MiCA for sure doesn't provide it, because MiCA is not about AML. Again, MiCA is mostly about requirements for crypto business to receive the license, and then what you need to do in terms of AML, you go to specific AML regulations and directives in your countries, and I'm sure they also do not address specific situations such as poisoning and dusting attacks.
Can you elaborate a little bit about poisoning and dusting attacks? What is it?
There is some schemes have. It's actually what we see in our crypto investigation service that we provide. That these attacks that used mostly to lure victims and then steal their cryptocurrencies by posting their addresses, and then they send the address to the address of the criminal or those who are attacker, and not to the address, so they compromise the address. So that's basically it. It's more about, I would say, crypto investigation rather than a AML question.
Okay. From my side, I just can add that if, for example, you shared your deposit address of centralized exchange, you can have several one for one coin, token, and this address was compromised. It in our software, it will mark it as not available to you to deposit address tokens anymore, and you should create new deposit address for you. So definitely somebody can use your address to send dirty coins and it will be marked as not available for next deposits for you. But if your account is still legible to receive money, you can generate new one and don't share this address to the same person who sent to you dirty coin before. And this is partially solving the problem. But of course, there is a question regarding, in general, that you have hot wallet and somebody can investigate through all deposit addresses where is your hot wallet address and send dirty money directly to it to try to, I believe, poisoning your hot wallet. But this is another problem. It should be planned attack to you. It's not like joke or something like that. Another question. Hello, Niko. Could you please elaborate what is the data input that you use that particular address is related to the dark market, for example?
Basically, it's researchers that are working, looking information offline, online, in public and closed registers, etc., to whom the addresses belong to. So if there is information that this cluster, so a group of addresses belongs to crypto and to dark market, then it will be marked as a dark market.
Okay. Thank you, Niko. I want you can type your questions to the chat. I want to take 5 minutes by your time to tell about the Simplify Labs solution, and then we can return to the questions. Simplify Labs is a software development company who is providing white label solution for centralized exchange. And I want to share with you the difference about MiCA regulation, what is required to apply even for the this license, and what's the difference with previous, let's say, what you should have right now in place. So first of all, it's KYC become, of course, it's required, and more questions asked during the onboard. You can't accept any money before you go through proper KYC process for your client. So it should be automatic or a process if you're expecting high amount of the clients. Another example is personal threshold management. So for each customer, based on source of wealth, source of funds provided previously, it should be personal threshold, of course, and risk level specified. And in case customer want to increase this threshold, he should provide additional information to MLRO. And another big difference, it's travel rule and transaction monitoring system in place. So travel rule, basically, it's a requirement to you to understand who send money into the platform and who you are sending money to out of the platform. So the simple example, when you are sending SWIFT or SEPA payment, you should specify name of this receiver, his IBAN, for example, full name, I mean, not the name, surname, and information about the receiver. The same situation in regulated exchanges. You should specify who are you sending funds to, or even who sent it to you. And the transaction monitoring system, this is a set of rules specified, like provided by the regulatory of the country receiving license, and maybe internal procedures of your company. So if some of the alerts, like as example of Niko, for example, a set of alerts, and if something happened and the transaction can be put on hold and rejected, or even the whole profile of the customer can be put on hold and requested additional confirmation or documentation. And of course, KYT AML procedure in place. You can use AMLBot for that, but it should be automatic or semi-automatic. So you should monitor every transaction in and out. And I want to tell that we have created MiCA checklist for everybody who wants to check their current solution. Is it ready for the MiCA? And if you want to receive this checklist or get some consultation from me or ask like help from the MLBot, in the chat it will be contact details, so you can book the meeting or contact directly. So let's return to the Q&A session, Niko.
Yeah, I see one new question from Stanislav. He's asking, if I understand correctly, that if there is a, let's say, clean address, and then this clean address receives cryptocurrency that is high risks, but he sends this cryptocurrency back. So will it impact the risk score of this crypto address or not? And definitely it will impact this the risk of the risk score of this address, because there were a transaction between this address and another address that is a high risk for, let's say, dark market. Yes. So definitely this transaction will be impacting the risk score of the clean address, and now the clean address will become not so clean, most probably also high risk, since it was a direct transaction with the dark market. And sending money back, I do not also think it's a solution, because it will be another transactions as outgoing with another same but still high risk address. So it again will be two transactions in common going with high risk signals that will definitely impact the risk score of the address that was clean. It will be also high. That is how it works, if in simple words.
I also saw the question interesting for me. So is it all DEXs considered like a high risk in general to receive from them, or like it's some differentiation between DEXs?
No, but the question was not about high risk. The question was that if are DEX transactions considered suspicious, let's say it's a medium risk in terms of blockchain analytics. Yes, we have like danger, high risk, suspicious, medium risk, and low risk, which are trusted signals. So why all DEX are under, most of the DEX are under medium risk, yes, and not low or high. As I said before, there are several reasons. The first one is that DEX are not regulated, so they do not do AML KYC, they do not need licenses. But at the same time, there are many people who use DEX not for something illegal, but for something legal, for staking, for P2P transactions, and it's totally legit business, legit transactions. There is nothing to worry about. But just because DEX are not the one who also does KYC AML, it might be used also for something illegal. That's why it's put under this medium risks. All transactions with DEX usually will be marked as suspicious. It doesn't necessarily mean they are suspicious, or usually you really need to take into consideration mostly high signals in the transactions. But depending on your business model, depending on your customers, depending on the profile of the client, transaction with only medium signals, such as DEX, let's say, signals, might be also suspicious in some cases. So again, you always need to take into consideration not only the data that you receive from blockchain analytics company, but also what you have about the customers, about his profile, about his previous transactions, or any other information you have about him, you find about him online, offline, depending which kind of services do you use for AML KYC.
Oh, okay. And regarding this answer, I have like question. If you are doing, for example, you receive it on your own personal cold wallet, let's say, or newly generated address transaction from DEX. So it's medium level, and do several, let's say, cascading transaction from to another cold wallet to another. It's all these wallets become like medium risk, or it's lower down on some levels that it's no detectable. Let's say I understand that history in blockchain keeps forever. Everything in blockchain is can be detectable, but one transaction, like 10 transaction before the current one, will be detected by your system and marked as let's say suspicion because it was from the DEX, or it's not working like that.
If all these 10 wallets would not be like cluster addresses, that has a cluster, because each cluster has a risk score, then the transactions between the DEX that is clustered, just like 50% riskiness, would, and these 10 addresses that will be in between DEX and my wallet would be also having same. Also, of course, depends if they're all clean, they would all have the same risk score as a DEX because they were just one interaction with DEX. But if these addresses before having another transactions with another clusters, with clusters with different riskiness, then this all would be impacting this address.
Mm-hmm.
So it's a complex question.
Mm-hmm. Okay, and I see the last question from Anna. Could you please recommend an average roadmap of actions if the wallet is 50% of risk level after the check?
Mm-hmm. So it's not a legal advice, of course. We do not provide here legal advices, etc. I can just basically tell my opinion. How would I approach the situation? Actually, 50% risk level is considered to be really good, and there is no problems usually with this percentage, because most probably these transactions or wallet would not have any danger signals. Even if you have, it would be so little that usually interacting with such wallets should not bring any problems. But in general, what I would say, how you would approach if you would be, I don't know, 70% riskiness, yes, 65, that you look at the general risk score of the transactions, and then you also see if there are some danger signals. So if there is no danger signals, usually the transactions would not have problems with any crypto exchanges. If there is some danger signals, then what are those danger signals? Because it's also different. For example, gambling also considered to be a high risk signal, yeah. But at some point of time, gambling might be regulated somewhere. Business company might have a license. It's high because there are many situations when it's just online casinos unregulated, or some Curacao fake license, and they are used only for laundering money. So that's why it's put under high signal. So again, depending on the high, you need to look at the danger signals and then taking actions based on the danger signals. If you just little the percentage, you might ask questions, you might do crypto investigation to go in more into deep of the origin of this percentage of this danger signal, danger cryptocurrency. Look at the profile of the client, build this situation, what's going on, like investigation, and then it will all bring you into some conclusions, whether there is some riskiness and you need to report, or there is no risk and it can be allowed.
Okay. Thank you, Niko. I believe we are finishing our webinar. Thank you for joining us. It was really interesting from my side. And once again, if you want to contact me or AMLBot sales team, please use the link in the chat. And have a good day, everybody.
I have also something to say to everyone, that if you will sign up to our solution, I will send you now a link, and will buy from us checks, you will have a 10% discount, plus you will receive 100 checks for free in your account, and you will have also discount for our AML training. I'm sending you the link if you want to sign up and receive free checks. Just a second. I send it to here. Information from Katrina. Okay, sorry, Katrina already sent it. So it's the same link. So if you use it, then you will have a possibility to receive 100 email checks for free.
Yeah. Thank you, everybody, for joining us, and have a good day. Bye.
Bye-bye.